Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about a very interesting project, in my opinion, that I recently researched on, and that project is called Alchemics or ALCX. Again, on the screen, you guys can see the price of this token, and you probably are shocked to see that this token is very expensive, but we'll cover the token price and why I feel like this token is actually very undervalued at the time of making this video, and we'll see what this project has to offer in order to justify the price, right? So as always guys, if you guys want to do some research on this project before you invest your money on this token, I suggest you to go to their website alchemix.fi, that is alchemix.fi, to learn more about the project, right? So what is Alchemix and what is it aiming to do? So their main selling feature is basically rewriting the laws of finance, the future yield tokenization protocol. So they aim to be the future of yield, optimizing yield, and we'll see how they plan to do this, right? Alchemix lets you reimagine the potential of DeFi by providing highly flexible instant loans that repay themselves over time. Again, let's break this down here. So Alchemix basically aims to recreate the current DeFi system, because if you see DeFi all obviously has several projects that offer borrowing and lending, and anytime you have to borrow a token, especially on the Ethereum blockchain or Binance Smart Chain ecosystem, you have to over collateralize your borrow, because you have to make sure that you deposit, let's say 10,000 BUSD or 10,000 USDT in order to borrow like 50% value, which is basically 5,000 worth of any other token or 5,000 worth of a stable coin, that's half the percent of whatever crypto you deposited, right? So in that case, you obviously have to worry about the underlying token price that you deposited, and if the token price is relatively stable, then you don't suffer liquidation. But if there is severe volatility on the price of the token, you can definitely get liquidated, and this has happened to numerous people in the past. And again, since crypto is a very volatile market, you have to bear that in mind, right? But what Alchemix does is basically wants to recreate or reimagine the potential of DeFi by providing highly flexible instant loans. So you're able to take out very flexible instant loans, sometimes even with low collateral, that repays themselves over time. So you are able to borrow tokens or borrow a loan, but the feature is built in such a way that the loans repay themselves, right? The synthetic protocol token ALUST is backed by future yield. Again, this is a very interesting concept, and I believe that this project has something that can definitely revolutionize the DeFi space, and I do believe that more projects will copy these features from this project. The synthetic protocol token ALUST or ALUST is backed by future yield. So they have their own version of stablecoin called Alchemic stablecoin or ALUST, and it's backed by future yield, which means any yield that you will be getting in the future is basically represented by ALUST. Join the growing wave of alchemy, its destiny on your terms. So you are able to join alchemy on your own personal terms, right? And that's something that's very interesting as a value proposition to investors. No liquidation, your only debt is time. Again, there is no real liquidation criteria for Alchemics, but they seem to state that the only debt is basically time, right? You can click on join the Alchemist to get into the and access their actual app. So some of the key core features of Alchemix is basically generate deposit DAI to mint ALUST, synthetic stablecoin that tokenizes your future yield. So All you need to do is you need to deposit DAI, which is a decentralized stablecoin, created from the Maker DAO ecosystem. And when you deposit DAI, you're able to mint ALUSD, and this is basically a synthetic stablecoin, as we saw before, that tokenizes the future yield, right? That you will be generating in the future. Automate yield earned by your collateral from earn.finance walls automatically repays your advance over time. So basically, this feature is very interesting. You are basically able to automate your loan repayments through Alchemics, and how they do is you basically yield earned by your collateral from earn.finance walls. So whenever you deposit your collateral, it gets deposited into Yearn Finance's walls. Again, if you guys don't know what Yearn Finance is, I made a video about it a couple of weeks back. I suggest you to check it out. It also is a very cool and revolutionizing project, which is also copied in a way in Binance Smart Chain as Beefy Finance, which is also a very interesting project. So Yearn Finance basically allows people to optimize their yield, but because when you deposit your tokens on Yearn Finance walls, the smart contract kind of takes your tokens, and it uses yield farming strategies, or it uses multiple different algorithms in order to optimize the yield on your particular token, right, that you deposited. So what happens in Alchemics is basically whenever you deposit your DAI tokens, um, the protocol automatically deposits that in the Earn Finance walls. And if you see the rates for Earn Finance walls for DAI, you can probably find it somewhere between 5 to 10%, and it's also variable, but it's since it's a stable coin, you will probably be able to earn a very high yield compared to other cryptocurrencies. And this Yearn Vault strategy automatically repays your advance over the time. So you're basically able to repay your own loans using a very simple but very innovative strategy, right? Redeem. Transmute ALUSD back to DAI 1:1 in Alchemics, or trade it on decentralized markets such as SushiSwap or Curve Finance. So basically, if you feel like you don't have a lot of options to use ALUSD, or if you feel like you want to repay back your ALUSD that you borrowed, you can transmute ALUSD back into DAI in a 1:1 ratio. And again, ALUSD, since it is a stable coin, you can redeem it back to your DAI tokens that you've already deposited in Alchemics, or trade it on decentralized markets such as SushiSwap or Curve Finance. So you can use your ALUSD to do other activities on SushiSwap or Curve Finance, right? Very interesting and straightforward concept. This is definitely going to revolutionize, because again, if you see, Yearn Finance's walls have been some of the most reputed walls in the cryptocurrency market, in the DeFi ecosystem. And by taking full advantage of Yearn walls in order to maximize yield uh, in an automated manner, you don't really have to worry about paying your loan interests or anything like that, because it's kind of like built into the system, and that is going to make DeFi loans much more efficient and much more user friendly, right? Again, I suggest you guys to read through their white paper and read their other documentation, because it is definitely something that you shouldn't miss out, right? And they also have some really cool videos about their promotional stuff. You can see their teaser videos, their promotional videos, their Alchemix Vault, Alchemix Transmuter, as well as Alchemix Farming on their website as well, right? So Alchemic interactions, capital efficient, get instant access to ALUSD while your deposit earns interest in the background. Again, just like how we mentioned before, you are going to be able to use your capital in the highest possible efficient manner through Alchemics. You have to deposit DAI, and your DAI automatically from Alchemics gets deposited into Yearn walls, and it starts earning interest, and that interest is going to be used to help you prevent yourself from paying any interest, because your DAI is already doing the work for you. And in return, you are given ALUSD, which is their native their token, and that can be used in SushiSwap or Curve Finance or any other yield farming strategies which may potentially use ALUSD, right? And this is going to basically pay off its own debt, self-paying debt balance. Over time, your debt is paid off completely automatically. Again, the yearn walls do the trick, and it's going to pay off your debt, which will definitely make this process more efficient. Again, they have a very nice picture here which it sums up everything. It's all on top of Ethereum, again, obviously, and you're basically relying on DAI, which will be locked in yearn walls to earn interest, which will basically pay off your debt. But you can use ALUST, which is basically provided to you once you deposit your DAI, and you can basically use your ALUST for co-finance or sushi swap, and in the future maybe multiple other projects as well, right? It's kind of like a Lego based building block, and it kind of fits perfectly, and this is one of the best ways you could probably present something in one single GIF photo, right? Competitive yield: choose from a growing number of high yield strategies to repay your debt. So they basically have competitive yielding. You can either choose from a growing number of high yield strategies in order to pay your debt, right? No liquidation risk. No matter what happens, you will never liquidate your deposit, and you will keep full access. Again, whenever you are able to deposit your DAI and get ALUST, your DAI will never get liquidated, right? And since it's going to be in the Yearn Finance Vault, you will basically get high competitive yield on your DAI, which will automatically pay off your debt, right? Low maintenance: once you've withdrawn your ALUST, you can simply let your loan repay itself. Again, you can permanently keep your ALUST without even paying the loan, because you don't really have to pay any loans, because your DAI is automatically paying the loans for you, and you are in full control of your ALUST, which you can do whatever you want with it. Again, another way by which they have presented their entire project in this wonderful picture is basically your wallet is going to be in the center, and you're basically depositing DAI, and you are able to borrow ALUST up to 50% of the DAI deposit, which is paid out in ALUST, and you basically manage the smart contract kind of manages user funds. It deposits it into Yearn Finance walls, which get a lot of capital efficiency into your DAI, and 10% of the profits goes to the treasury, and the rest of the 90% goes back to paying back your debt. And the treasury basically uses the funds for numerous reasons. DAO uses funds for developer pay infrastructure costs, development grants, community discretion, and so on and so forth. So basically, the Alchemics token itself, ALCX, is the native governance token, and it's basically used for governing the community of the Alchemics ecosystem, right? And ALCX holders vote on protocol parameters, funding, feature requests, matters of the DAO. So basically, people who hold Alchemics or ALCX tokens will form a very important part of this ecosystem, because they can govern how the 10% of the profits that's taken from the Yearn vault is going to advance the ecosystem, and also provide protocol parameters, funding, requirements, as well as feature requests and matters on how to govern the DAO itself, right? And yeah, that's pretty much straightforward explanation. If you guys want to check out this chart in detail, I suggest you to go to their website, and as a user, you would be able to use the ALCX tokens. Again, it's going to be an expensive token at first, but you can see the amount of value that's packed into this token. It's still relatively undervalued, as we'll see in a few seconds, right? Decentralized and trustless: Alchemix is built using decentralized smart contracts on the Ethereum network. Again, it is built on the Ethereum network. I hope they kind of branch out to other networks such as Binance Smart Chain, where the fees are going to be significantly low, right? Audit pending: Alchemix contracts are not currently audited. We shall be engaging auditing firms after launch. Use at your own risk. Again, there's a very big risk factor here, because it's not really audited, but at the same time, the team is very reputed, and the thing is, there's a lot of positive news about Alchemix and how it's kind of going to change the DeFi space because of its self-paying loans. And also, if you see, if you have had an idea of getting into a project way before anybody else, this project is basically not even audited yet, and therefore it poses a significant opportunity, obviously with very high risk. But if you get in early, you would probably be able to come out, you know, with a pretty good profits, right? So that's something that you have to bear in mind. Although this project is not really audited, there are people who suggest that this project is really safe. But again, you have to do your own research and come to that conclusion yourself. And this video is not financial advice. I'm not a financial advisor, so please don't risk any money that you're not willing to lose, right? Although there may not be an audit anytime soon until they kind of publish the results on their website. Even after they publish their audit results, it doesn't guarantee that this project is safe 100%. Any crypto-based DeFi project is going to be risky, and you have to assess the risk yourself and be comfortable in investing an amount that you're willing to lose, right? So please bear that in mind. So let's look at the roadmap for this project. Audit, ensuring the security of the protocol and future add-ons. So they're basically focusing on primarily getting their audits done, and once they get it done, you will be able to see the update on their website. More collateral types, a wider choice of stablecoin collateral types for ALUSD. So now you can only participate in this ecosystem by using DAI stablecoin, right? They may probably bring in potential other new stablecoins or even any crypto collateral, because there will be a lot of demand for people who have crypto to participate in this ecosystem, and I do believe that the developers know that, and therefore they'll probably add a few more stable coins in the short term, but in the long run they'll probably add actual cryptos that are volatile, and I do believe that they may potentially add ether itself as a collateral, and that will be really huge, right? So you can definitely see a lot more collateral types being added. I do suspect that USDC is probably going to be the very next crypto, or USDC and USDT will probably be next cryptos that will probably be added, and you can also find synthetic USD or other types of USD stable coins based on the DeFi ecosystem being added as well, because I think that's going to definitely draw a lot of attention if they do that. More currencies, addition of currencies like ETH and wrapped BTC to be added within Alchemics. Again, as I mentioned like a few seconds back, they may probably add other cryptocurrencies, but they are definitely planning to add Ethereum and wrapped Bitcoin, which are some of the most popular cryptocurrencies. And by doing that, they're definitely going to garner a lot of attention, because the DeFi space really doesn't have a lot of use cases for Ether and wrapped Bitcoin in yield farming. And these kind of opportunities where you don't really have to worry about liquidation, you don't really have to worry about any form of lockup period, and this is kind of the protocol that will definitely attract people once Ether and wrapped Bitcoin is added to the system, right? So that's pretty cool. dApps, additional dApps to expand the Alchemics ecosystem, such as Alchemics based credit lines and more. So they're definitely planning to add more functionalities, and more dApps will obviously use ALUSD, not just SushiSwap and Curve Finance, but those are some of the most popular, and therefore you can already see a lot of traction from those platforms. But once bigger projects like Aave, Compound, and all these other platforms start adding ALUSD, you can also see adoption from them. But the Alchemics ecosystem itself will kind of like branch out to credit lines and much more financial systems, right? The funny thing is they have never added any form of an actual timeline on whether it's going to be in the Q1 of 2021 or Q2 or Q3 or something like that, which is really strange, because most projects kind of like add like a year, quarterly timeline in order to say when we can probably expect. But I believe that based on the order, it seems like their audit is the first preference, and dApps will probably be something that you can see in the long run, right? So seed investors, basically they have some really good seed investors that have popular names associated with them, such as Some Capital and DCV, who also I believe have CryptoPunks as some of their other projects that they've invested in. Strategic partners is basically some of the really good names, some really good strategic partners for this project, and many of these many of these partners are not really well known, but they are some of the most key partners for the Alchemics ecosystem and trusting investors. Again, there are a few well known like Alameda Research and Magic Ventures, but I'm not really familiar with the other ones. So, but it's pretty cool to see some really big guns backing this project, right? Transporting the philosopher's stone into the 21st century, and you can basically read through their white paper to see what are their main how do they actually function when it comes to the details of all the functionality, right? So that's pretty much it with regards to their website. I highly suggest you guys to check out their documents and do your own research before you decide whether this project is worth investing, right? So let's go to the CoinGecko page, and again, this project is basically 212th ranking based on market cap on CoinGecko, and it's currently trading at $1,825.64 at the time of making this video, and it recently had a 2.2% increase in the past 24 hours, right? So again, initially by looking at the token price, you'll probably be taken aback on how high this token price is. But again, bear in mind that DeFi is basically providing opportunities for people to borrow and lend and earn stable income or passive income through crypto in a completely decentralized manner, right? But there are certain flaws with first generation DeFi lending and borrowing, which is basically you have to over collateralize and you suffer a very high risk of being liquidated if the price of the underlying token that you are supplying is basically going to go up or down in a violent fashion, right? Well, Alchemix is trying to fundamentally change the way loans work, and this is probably something that you can call as a second generation DeFi lending and borrowing kind of like a system that it's offering. And for a project with such high innovative potential and such high adoption potential, you can definitely see this token being in the five figure price point, right? This token is definitely going to explode in value, and again, you don't really have to buy a whole token. If you are interested in buying this token, you can probably buy a fraction of this token, which is still fine, because if you see Yearn Finance initially started off last year at a price point of somewhere between $400 to $500. People were thinking that that was highly overpriced, but Yearn Finance on the very same year, last year, went all the way up to $40 to $42,000 per token. So people who didn't really buy Yearn Finance at $400, they kind of kicked themselves because they missed that opportunity, right? If you ask me, again, my personal opinion, not financial advice, obviously, I believe that this project has an incredibly high potential. It can definitely go to at least $10,000 by the end of this bull run. In an extremely bullish scenario, this project has a chance of going to even $20,000 per token, right? Let me tell you why. Again, it's not just because of the very strong fundamentals, but also because of some strong tokenomics that this project has. So if you look at the market cap, it's only $265 million in market cap, right? I know we have covered a lot of projects that have less than $100 million in market cap. $265 million in market cap for a token for a project that aims to completely redefine the borrowing and lending landscape on the DeFi ecosystem is still relatively undervalued, in my personal opinion. If you look at the max supply, again, this token is extremely scarce. The maximum supply of this token is only 2.3 million tokens, which is less than several, thousands of projects that are out there which have a billion tokens or even 500 million tokens as max supply, or even 100 million tokens as max supply. I personally feel like any token that has a scarcity value built into it is definitely going to perform well, even if the fundamentals don't really work out in the long run. The scarcity value itself is going to make tokens much more valuable, right? and that's something that I personally expect from a token that I want to invest in. And this token is extremely scarce. 2.3 million is literally, um, you know, like literally very scarce. It's one of the scarcest tokens out there, right? And if you look at the circulating supply, there's only 145,000 tokens that's currently in circulation. So again, although you can clearly see that there will be a lot of potential inflation of this token, there is not a lot of tokens left, and therefore the price of this token is in some ways justified, right? And in fact, I feel like it's a little bit undervalued in my personal opinion. But again, that's because of the fact that if you look at the market cap TVL ratio, it's 0.27, right? So if you want to know what market cap TVL ratio basically means, is CoinGecko has this very nice explanation. Ratio of market capitalization over total value locked of this asset. A ratio of more than 1 refers to its market cap being greater than its total value locked. So what this means is, if you take the market cap and then divide it by the total value locked, you get a ratio which can either be equal to 1, less than 1, or greater than 1, right? If it's equal to 1, it means the market cap is on par with the total value locked. Since this is a project where people have to lock a particular token as a collateral, as more and more people lock their tokens on this platform, the more and more value this project is going to bring to the society, right? Or bring to the DeFi space, right? So if you see, there is 0.27, so the ratio is less than 1, which means the market cap is less than the total value that's locked in this project. So this project is actually very undervalued. And if you see the token price, it's supposed to, if you see, if the TVL, if the market cap to TVL ratio is equal to 1, then this project can potentially reach 5,000 or even $7,500 range pretty soon. But as the market cap and total value locked increases or becomes more than 1 in the ratio, this token will probably perform extremely well, and it will probably even cross 10,000 value mark, right? So based on that ratio, I believe that this token is definitely undervalued. This token has an incredibly high potential, not only because of its fundamental strength, it also has a very low market cap to TVL ratio, 0.27. It's extremely undervalued, and max supply is actually one of the lowest, and therefore the short-term inflation rates for this token is actually very low, and this token is going to be one of the scarcest tokens in the long run, which is definitely going to make this token's price explode and cross $10,000 easily by the end of this bull run. Again, that's just my opinion. Again, there are people who may disagree with me, but again, I'm just giving my opinion. Please do your own research and come to your own conclusions. I believe that this token is undervalued for this price point, and I do believe that people who think that this token is expensive, they don't really have to buy a whole token of this token, right? They can probably buy, like, let's say 0.01 or 0.05 or 0.5 or 0.25, of this token, and they'll still be able to make some really good gains, right? That's just my opinion. So if you look at the charts, you can clearly see that this token has another one of the reasons why I like this token is it's constantly on the uptrend, which seems to tell me that people are definitely noticing this project, despite the fact that this project is not even audited yet. But again, the people who the people who develop this project are definitely some of the very smart minds on the crypto space, and their project is definitely being trusted even before their audit, and even after their audit there's no guarantee that this project is going to be 100% safe. There's always a risk associated with it, but based on the innovative grounds that this project is built on, this project is definitely bound to succeed. If you see, this project only existed since February 27th, so it has about a month to kind of showcase itself, and it's still undervalued after a month. And a month in DeFi terms is actually very long. There are projects that pump like crazy and set like 3 all-time highs in the first week of its launch, and this token has existed for a month, and it's still relatively undervalued, and that's what baffles my mind, right? If you see, the token price initially started off with $310 per token, and it's been steadily increasing. It doesn't really, it does have some sharp peaks, but it's very sustained, and it immediately reached $1,400 by March 3rd. And it kind of like went down, went up, down, and then had a decent correction on March 11th where it reached $784 per token, and then it went back up again, touched a new all-time high of $1,700, and then went back down, and then went and touched a new all-time high, down, and then went and touched a new all-time high of $2,000 for the first time, and then came crashing, and it reached about $1,200 per token, and then it moved sideways a bit, and then it kind of like in the last week of March it kind of started climbing up, and now it's at its current price point of 1,700 and 90 to 1,825 in that range. And I do expect this project to kind of go down a bit, and it can definitely touch the 1,750 or 1,600 price point, which would probably be a really good buy. Again, even if you don't buy a whole token, it's totally fine. There's always an opportunity to buy a fraction of a token, although that may not be initially ideal. It's still a really good opportunity, right? If you look at the Bitcoin comparative, this token has definitely performed extremely well when it comes to Bitcoin comparative. It's had very similar patterns with Bitcoin comparative compared to the dollar comparative, and the pattern is kind of like overlapping. It was initially trading at 656,000 satoshis, and then it reached an all-time high in the first week of March at about 2.8 million satoshis per token. It then crashed, gave its buyers a good opportunity to buy at 1.4 million satoshis before going back up and trying and testing new all-time highs of 3.5 million satoshis, and then went back down, and then now it's around the 3.1 million satoshi range. I do believe that it has a potential to go down to 2.7 million satoshis, which would be a really good buy opportunity. Again, if you have a few spare satoshis that you want to invest in, this would be you can probably wait, and you can probably average in as it's going down. But if you wait a bit, you'll probably be able to get a really good price point for this token, not only in the dollar comparative but also in the Bitcoin comparative, right? And if you look at the exchanges where it's available, you can buy it from SushiSwap using Ether. But I do not recommend that, because this project is not only the token itself is expensive, but also the gas fees are also very expensive. So I wouldn't really recommend SushiSwap. FTX is a centralized exchange, which is also one of the reputed tier 1 exchanges where this token is available. You can get it from USD. You can also get it from Gate.io, although I wouldn't really recommend Gate.io. 0x protocol is basically one of the most popular second layer solutions for Ethereum, which is also an option for people who want to buy it in a decentralized manner using USD, right? Either FTX, if you don't have an option to buy it from FTX for some reason, you can buy it from Gate.io if you don't want to pay the high fees on SushiSwap, but bear a little bit of caution when you're trading on Gate.io, because I do believe that certain countries are restricted from buying altcoins, which is probably going to be Japan, United States, as well as Canada. If you are from these countries, then you may probably want to buy it from FTX. But if it's if you guys have used Gate.io, and if you find successful successful transactions and withdrawals from this exchange, then by all means go ahead. But if it's available in FTX, I don't think there's any other option. There's any other reason to buy it from other places, right? If the gas fees in Ethereum goes low, then you can probably get it from SushiSwap. Otherwise, you can use 0x, right? So what's my final verdict on this? This project is basically aiming to create an option where you don't really have to pay your loan, because it's using a very clever and very innovative strategy to pay your loans based on smart contracts, which is going to revolutionize the DeFi space, and it's going to be adopted by numerous projects in the future. The token itself is extremely undervalued because of its market cap being relatively low compared to its fundamental, the token fundamentals. Its Market cap to total value locked is less than 1, which means it's extremely undervalued. If you see the max supply, this token is obviously one of the scarcest tokens out there. Its circulating supply is also very low, which obviously makes it even more scarcer. And you can also see the charts are extremely bullish because this token has been constantly, even if it goes down, there are people who are willing to buy this token because this token has some incredible like options to offer for the long term potential hold, right? And I believe that this token is definitely going to explode in the long run, and I believe that this is a very bullish token for the long run, and I'm going to hold it for the long run. I do hold about 0.5 of this token. I'm probably going to average in and add more so that I can hold one full token. I do see this token crossing the $10,000 mark by the end of this bull run, and in the extremely bullish scenario, this can even cross $15,000 to $20,000 per token. It's highly possible because of its strong fundamentals, right? Again, please do your own research before you put any money in this token, because this video does not contain financial advice, right? Again, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video guys. If you like my video, please click the like button and subscribe for more videos. See you in my next video. Bye.